Traders and investors, if you're here watching this video, you've either been sent a notice as one of our subscribers that I posted a video and you enjoy the lessons, or you've come across Master Trader channel on YouTube in search of how to make money in the stock market and what is the best indicators to use that work. While you're here, subscribe to the channel and press the button or that bell to get updates when we post. What I'm going to share with you I hope opens your eyes, because I know from my own experience when starting out how difficult it is to find what I'll call the truth in technical trading and investing. If you haven't realized already, you soon will find soon enough the odds are stacked against you. The vast majority of technical trading revolves around the indicator-based methodology. There are hundreds of them, and when you consider the fact that you can change the settings on any of them, the numbers probably go to infinity. The education firms that use indicators, trend lines, Fibonacci lines, and a whole lot more to teach trading aren't really teaching you. What they're selling you is indicators, and many of them at extremely high prices. The more complex the indicator or combination of indicators, it appears to be that the prices go higher and higher, as if paying an extreme high price for these indicators will ensure profitability. Nothing could be further from the truth. The only ones making high profits are the indicator salesmen. Let me show you a little of what is promoted as the way to use technical analysis if you're investing and trading to make money. It's likely you've already seen some of these indicators and trend lines and combinations of such that I'll show you, but realize that I could have shown you hundreds, if not thousands of more of these indicators and combinations thereof. I certainly could even convince you that a certain combination of indicators that I could create myself will lead to profits. Many of you would pay me for those proprietary indicators. I'm not going to do that, of course. I'm hoping to open your eyes that what you've been told, and maybe what you are being told while you're watching other videos on YouTube today, will lead you down a maze of confusion that will end you leaving the stock market with a lot less money than you started out. And you'll be wondering if anyone could possibly make money as a technical investor and trader. Let's look at some of this. Let's start out with something relatively simple. A bit of a spaghetti screen, as I like to call it, when you have too many moving averages overlapping the prices, and at times where you can see those moving averages start intersecting with each other. And there's some information that could be gained from doing that. But what I want to focus on here is why use all of these indicators, or I should say moving averages. Well, and many that use them in this fashion, they are of the false belief that they're of supporting resistance. Some of them will use them as a combination of trend analysis, whereas you can simply just follow the trend of higher highs and higher lows, and when that fails to meet that definition as to when the trend is broken. Also realize that trends exist in many different time frames. Every trend or time frame that you can change to, the trend can change. Sometimes they're in alignment, most of the times not. And certainly as you change the time frames, all of these moving averages are going to be in different locations. So how could they possibly really be support or resistance? And some will be using moving averages where they use Fibonacci numbers, because if there's some magical in those numbers, those sequence of numbers. For example, this purple line is an 8-period exponential moving average, exponential moving faster than a simple. So they think that there's some advantage of that. And then when the 8 crosses below, this is a 21 exponential. 21 is a Fibonacci number if you're not aware of it. And then the green one is a 50, and this is a 100, the blue one, and the red one is a 200. That's widely followed. And then some of them will use a combination of simple and exponential ones all together. And of course, it's an attempt to find the Holy Grail. So using these multiple indicators without even understanding what they're really supposed to do just begins the confusion and analysis paralysis syndrome. In addition, what they will begin to tell you is follow the break of this trend line, or this one moving down, this one going up. Who even knows what some of them connect them to. Some will connect them in this fashion through different points. And then it leads to the question, well, which lines do you really, or dots do you connect? And if you draw them over the top of prices, and prices it come down to it, is that going to be support? Is a combination of different trend lines coming together going to be a stronger area of support or resistance? Can a trend line break where you believed it was support and retesting it? Can that really become resistance? Connecting dots and projecting those lines into the future cannot create support and resistance where there's nothing there. It's a false belief. It will lead you into that maze of confusion. So let's stop that. What you need to do is just simply look to the left and see where there was a significant higher low that is formed. That's where prices are going to go to, and buyers are going to step up again. And then you'll look at your price action, whether it's in a bar chart or a candlestick chart. In any event, candlesticks are another conversation, but you don't need to learn candlestick pattern names. It's all about retracements and how prices move from one level to another level. How far did it retrace into a prior bar? How far did prices retrace into a prior swing high? But let's continue to move on with this indicator conversation. Let's just get rid of some of these lines here, get a cleaner chart. So what some might do is maybe they will remove some moving averages. Let's just get rid of a couple of them here. So now what they may do is maybe they're using 3 moving averages, but now they'll throw a MACD indicator on there, which is supposed to be a momentum trend following indicator, which tells you when things begin to turn. Now realize it can only follow what is. So if prices begin to whipsaw, the signals are going to whipsaw. You don't need to look at an indicator to know when prices are whipsawing back and forth. This is one of the simple ways we use moving averages to know that if you have your shorter moving averages where they are intertwined with each other and prices are intersecting above and below, you're in a whipsaw type of a market versus a trending type of a market. What they will continue to do, and there was a very popular service out there some years ago, and their whole method was based on a stochastic oscillator and a MACD oscillator and a 30-period moving average. And they sold you a very expensive package that put arrows when they were in alignment, either up or down, and that told you what to do. It was like a red light, green light system. And many like that because you want to believe that just getting signals go or stop works, but it doesn't. If it was that easy, all of these indicators would stop being developed, but it's not going to. So, and indicator salesmen create indicators. They put their name on them to sell you indicators. And it's a business. It's not about making money in the markets and trading. It's a business of selling indicators. Let's look at another, that very popular indicator as of late, the last few years, of the holy grail of indicators. Now, if that kind of startled you when you saw it pop up on the screen, well, this is truly an indicator that's supposed to do it all. It's, and excuse me if I'm destroying the name here as to what it's called, something as to the effect of a Chicomee cloud, but it's supposed to follow the trend and give you support and resistance, and when prices are above the cloud, you buy pullbacks into the cloud and vice versa. But again, this is the holy grail of indicators, and something is supposed to promise you how to make money using indicators. Consider going in the other direction, because they just don't work. It's just an effort to continuously find, something that is going to be consistently work. And the only thing that works is just by using a simple line chart. Use a simple line chart such as this. We can put a couple moving averages on here. And what I use is a 50 MA, a 200 MA, and a 20-period moving average, which I'm not going to put on here for now. And why do I use these two? Because these are what institutions use, and they will simply either blindly buy at those moving averages, or they will make decisions to exit a position based on a break of a 50 or a 200. And so we use those same moving averages because this is what the big money is using. And this is what we call, or what can become, a self-fulfilling prophecy. If enough people are looking at the same thing with similar beliefs and are willing to act on those beliefs, it can have an effect on prices. Now, as a 200 MA, you can see it can be like a loose fence, so to speak, just a simple break of it where many will think that, oh, it's broken there, it's got to go down. As you can see, nothing could be further from the truth. It broke below it and then went back up again. Over here, prices stopped, but look at what the 200 was in alignment with. It was right there in alignment with the prior low. I've been telling people for years, simply look to the left and see if there is a significant turning point in the same area of that moving average. It works. It's simple. It's all you really need. Look to the left, see if there's a significant turning point. Now you can see here where the markets have turned up from here, but they've violated the trend. They've broken below this major support, this major support, this major support. This is a broken trend. This is a broken market right now. This conversation isn't about market internals, but our market internals have guided us to the probability that the markets will likely rally a bit from here. This week, we're actually hoping for a retest since we've got this little bit of a sell setup here. But our method is based on price. We use price action. We use market internal gauges and intermarket analysis, or what I call techno-fundamental analysis. And the combination of those concepts coming together provide us high probability trading and investing opportunities. We also use multiple time frames where we will look at what is the trend, the weekly chart. Has that broken through major support? Are they up at prior resistance? And putting all of this together puts the odds in your favor. But my message here for you is, if you're thinking about buying that indicator package, don't do it. Learn how to read price action. If you're looking at your platforms such as this, or whether it's TradeStation or Realtick or Thinkorswim or many of the others that are out there that have hundreds of indicators, close down the box that opens up the indicators and start focusing on price. Watch the videos that Dan and I have posted here on YouTube. Join us on Wednesdays for Master Trader Live, where we discuss various trading concepts and option trading concepts. You'll learn a tremendous amount from those free events. We also have them on the website. You can visit mastertrader.com under resources and watch the old ones. Get on our email list and get a free chart of the week, and you'll learn a tremendous amount. And then eventually, if you want to take your education to another level, email myself, Greg at Master Trader, or Dan at Master Trader, or just sign up for a course on the site there. So I hope you've learned. Hope you've piqued your interest here. If you have any questions, because again, email myself, Greg at Master Trader. Good trading, everyone, and we will be talking soon.